Hello and welcome to Chartbusters. Well, it's earnings season and there are plenty of companies that have reported numbers. So let's get straight to that. GE Shipping, well, it saw its third quarter. They reported a good revenue growth of close to around 50%. The profitability as well was up by close to around 200 points. There was also strong expansion in margins. To understand the way ahead and what's gone on in the past quarter, we're joined with Mr. Shivakumar, the Executive Director and Chief Financial Officer of the company. Hi, Mr. Shivakumar. Thanks so much for joining in, sir. Well, give us an update first. China is reopening. What kind of an impact has it had? If you could give us the updated rates on your crude tankers, your product tankers, as well as dry bulk. What are the numbers out there?
Good morning, Nigel. Yes, China is reopening. However, it's a little early because we've just come out of the Chinese New Year week. Probably we'll start seeing action now. It was too early because this year Chinese New Year was a little earlier than it was the last couple of years. Once we get out of that and get back to business as usual, then we'll really see the impact of the Chinese reopening on the commodities markets. So far, it hasn't had any significant impact.
So which way do you...
On the dry bulk market specifically,
you want to give us a couple of numbers, Mr. Shivakumar? The updated numbers out there on all the three verticals that you normally talk about?
Yeah, so the dry bulk spot rates are still weak. So we are below $10,000 a day across the board in the spot market, current spot market rates, whether it's Supramaxes or Kamsarmaxes or Capesizes. So they're still pretty weak. But again, this is always a weak quarter. So the first quarter of the calendar year has traditionally been the weakest quarter of seasonally. So its dry bulk is low. Product tankers have come off significantly. Again, January is typically a weaker month than December. We saw very strong December 22, and product tanker markets have come off since then. They've come off quite a bit for the larger ships. Again, we'll await the reopening and see what happens. Crude tankers are still pretty strong, slightly lower. So crude tankers, which were probably peaked at about $65,000-70,000, are probably somewhere around $45,000-50,000. But again, this changes a lot on a day-to-day basis. You can take this as this is what it is today. Tomorrow might be very different, $10,000-20,000 different.
And product tanker, you said the rates were what? Because dry bulk is below 10,000, crude tankers around 40 to 50,000.
So the product tankers are somewhere around $30,000 a day, which were probably in the 45 to 50, or probably around 30,000. The larger product tankers, which went up quite spectacularly in December, they went up to $75,000 a day. Those are probably somewhere around $15,000 a day. Again, we have only two of those. So ours are more the mid-sized product tankers, which are that 45,000 coming down to 30,000 kind of now.
But in either case, they're all above, way above your break-even price as well, right? Because gas tankers had about 16 to 18,000 per day sort of break-even. Crude had about 12,000. Dry bulk and product had around 10 to 12,000. So what sort of numbers can we expect in the fourth quarter of this financial year? I mean, that's what we want to understand, because what's happened in the third quarter was something that people could extrapolate given the rates that they were. Now, is the outperformance of the third quarter likely to sustain going ahead, given that the rates have come off a tad?
So we don't know what the rates will be. We don't give earnings guidance because, and one of the reasons is because we just don't know. As I said, we don't know what our ships will get fixed at tomorrow. It might be $20,000 higher or lower. All I can tell you is these rates, which I mentioned, are lower than they were for the average of the last quarter. Okay. As the rates are today, so the less than $10,000 a day is lower. The average bulk carrier earnings across the 14 ships that we have was about $16,000 a day in last quarter. Right. Currently, they are below $10,000 a day. That's a spot market. Okay. In product tankers also, on average, we are below what we averaged in the last quarter. So that's sort of what I can say as it stands today.
With the China opening itself, you said it is early days right now, but given your experience in this industry, what sense do you get, the rates, which way these rates will move? We understand that they're lower than the average that we saw in the third quarter. And do you think that these levels will sustain at lower levels, or can it move higher?
So, as I mentioned, this quarter is traditionally a weak one for dry bulk. However, going forward, you should have strength. So, last year we saw a 4% negative growth in world steel production. Unless you have a really significant recession across the board, with China not coming and China doesn't come back strongly, you should have steel demand growth, which is the main driver of dry bulk carrier demand growth. So you should have earnings improving from here. However, it's all down to demand, and it's still early to say about China, and because we don't have the data yet. Probably by end of next month, we'll have some data on the fixtures which are happening, cargoes going into China, but not yet.
Okay. All right, Mr. Shivakumar, let's talk about your offshore vertical. It's a smaller part of your business, 22% odd. That's seen a good turnaround, actually. And there's a bit of an update out there. Maybe it's led by oil drilling as well. And I'm looking at it, for many quarters you reported and a bit loss, but that turned around. What's the outlook on this vertical itself? For the past quarter as well, it was in the red, but I don't know whether there's a seasonal aspect that plays out over there. Going ahead, you're expecting this to continue in the profit train. Even in the last fiscal, in fact, delivered a negative number on the EBIT front. But that could be the delta. If it turns around, then there's a swing in the earnings. Go ahead.
That's correct. Yeah, your reading of it is correct. What's happening there is that it's not a spot market linked business. So these are contracts, typically 1 to 5 year contracts, typically around 3-year contracts. So when it goes down, when the market goes down, our results go down slower than the market because you have the coverage that you have at the old rates. Similarly, on the way up, though the market is much stronger than it was a year ago, so the recent pricing that we saw is about twice the last pricing that happened for that kind of rig. So it is 2x the pricing of N21 for a 3-year contract in India for a rig. Vessel rates also are up between 50 and 100% for new pricings. However, a lot of our capacity is locked in. One rig comes off contract in this year, one of our 4 rigs. That rig has got priced up by 75% on the previous rate. And that will only kick in sometime late in this financial year. The current contract goes on till mid-2023. And by late 2023, she should go on to a new contract at a higher price. So this will filter through the results a little slowly, but the trend is in the right direction.
And when do the other 3 contracts, when do the other 3 rigs come off contract?
Yeah. So 2 rigs come off contract in calendar 2024.
Okay.
And both of them, of course, if you just do an MTM to the current pricing, then the rates are much, much higher than the rates at which they are operating.
All right, take that point.
But those will only affect FY25, late in FY25 results.
All right, Mr. Shivakumar, thank you so much for joining in and giving us all those details. Wish you good luck for the remainder of the quarter. Importantly, remainder of the year as well. As you said, that no one knows anything, but we hope that things will get better from here. With that, we'll step into a short break. But as we do that, here's some exciting news. The most coveted leadership awards are back. CNBC TV 18 on